I believe Mobileye is a 10x opportunity. And in this video, I'm going to go over 5 reasons why you should be a buyer of this company. First, we're going to get into a catalyst. Massive, massive catalyst. What I believe in my gut and what I believe based on data that I've seen is that Honda on January 7th at 10:30 a.m. Pacific Standard Time is going to announce that they have partnered with Mobileye to basically be the vehicle operating system from level 1 all the way up to level 5 autonomy using Mobileye's technology for all their Honda Zero Series models. So all the next the Zero Series models are going to be the models for the not just the next year but the next decade, that they're going to be coming out with. So massive, massive catalyst. The reasons I believe this: one, you always let the bigger business announce first. They are going to the same conference, the CES 2025 conference. They're going to the same conference, and Honda is announcing 30 is presenting 30 minutes before Mobileye. Now, not just that. If it was just that, you would call me crazy. It's not just that. Mobileye has also partnered with Lyft recently, and the Lyft CEO was on CNBC, and he named every single car manufacturer that Mobileye was working with, but they added in Honda, and they are currently not working as an OEM with Honda right now. They do not have a deal in place with Honda for something of this nature. Also, Mobileye has been hinting at the fact that they are very, very close with 9 of their 10 different OEMs to create to finalize a deal. And they have it on there that these are Japanese, and they've hinted at landing a deal with a major Japanese car manufacturer. So we're basically a major one. We're talking about Honda, Toyota, or Mazda. And the fact that all these other things are lining up and what my gut is telling me overall, you can believe me or you cannot believe me. We're going to find out on January 7th. That's the facts. We're going to find out on January 7th. I'm either going to look like an idiot or I'm going to look like a genius. And I called it, right? I'm okay with that. Either way, I'm still invested in this company for the long term. I still have this on as a trade in the long term for the other 4 reasons we're about to get into. But just to elaborate on this a little bit more, if we go into here, the last Honda had basically canceled their partnership with GM's Cruise basically a couple months ago, and they canceled that deal with them completely. So that's also lining up for them that they need a new OEM, they need this new autonomous vehicle technology, and Mobileye is a top 3 name. And yeah, they just have amazing technology from level 1 all the way up to level 5 full autonomy. So the stars are aligning. But I went over some numbers, right? And I believe this would be, if I'm right about the Honda deal, I believe it's going to be a 10 to 30 billion dollar deal over the next 10 years. Now, let's say they did a 2 or 3 year deal, which I don't think they would. I think this is going to be a longer term deal, because when they did the deal with GM, it was a 12-year deal. I believe it would be a longer term deal, but even if it's not, I think the shorter amount of time frame, um, with that value would extrapolate to the same amount of a 10-year, 10 to 30 billion dollar deal. Now, in 2018, right, almost 6 years ago, they got 2.75 billion dollars over 12 years. Well, 2018 autonomous vehicles and full self-driving were basically, no one believed it besides like Tesla, and nobody was really talking about it. No one really saw it coming. No one really even thought it could happen so fast. Fast forward to 2024, almost 2025 now, it's a much popular topic, and we're talking about this being a reality. Not only is it already a reality, but we were talking about it being a full-blown reality within the decade. within the next 5 to 10 years. So 2.75 billion in 2018 extrapolated out to now, um along with, other deals that we know of, and along, like, I believe it's going to be a 10 to 30 billion dollar deal over a 10-year period or so, or something around that, extrapolating out to the 10 to 30 billion dollar mark. And let's just say it's 10 billion, right? For 10 years. That's $1 billion added to the revenue of Mobileye per year. $1 billion added to the revenue per year for Mobileye. Their current 2024 revenue, because it had a dip because all the headwinds, China, inflation, interest rates, 1.7 billion it dipped down to from over a little over 2 billion in 2023. So they're going to add a billion to that to get the 2.7 billion, which basically gives them a price with their current price to sales ratio up to about mid 20s, about $25, and they're an $18 stock right now. I mean, massive, and that's the baseline. That's just if we get the $10 billion and have $1 billion per year. And the thing with here, they got $750 million right up front. So they would get a billion right up front, and then bam, we're talking about $2.7 billion revenue next year without even adding in, or yeah, next year, not even adding in, if they have, um, accelerants elsewhere, you know, just overall increased revenue from from the dip and the bottoming out of their revenue, we could be talking about 3 billion, almost doubling their revenue in 1 year. In 1 year, doubling the revenue. I mean, come on. Come on, guys. This is big time, big time. Um, Not just that. Let's see. Fundamentals. The fundamentals of this company. Well, we'll just talk about this real quick. Um, Make no mistake, Mobileye is a top three name. A top three name. This is reason two. They are a top three name in the full self driving autonomous vehicle space. A top three name. You have Tesla, you have Waymo, and you have Mobileye. Top three. And this is going to be a multi-trillion-dollar total addressable market moving forward over the next decades. Multi-trillion-dollar, and they're top three. Waymo already has a ton of full self-driving taxis out on the road, but they use LiDAR, and it's very, very, very expensive per vehicle. And I don't really believe that they're going to really be in the space of supplying or fitting other vehicles and other car manufacturers vehicles with their technology like a glove, because it's so expensive. Their technology is way more expensive than the actual cars themselves. Hundreds of thousands of dollars for their lidars and all their equipment. Where um, Mobileye, they package it all together, and it'll be a lot cheaper to put it on X amount of cars all at once, like they would, if they get this Honda partnership. And they can charge, they have the equipment, they have their price for that, but then they get all this extra money, obviously, for delivering their products and services, right? And then Tesla, they could decide to um, fit other car brands with their technology and their cameras and everything, but I don't believe they will, honestly. I think Tesla's going to take and do what Apple did and have this ecosystem of their products, because they are going to have a lot of products coming down the pipe, and I think they just all keep it all in house, and they just have their ecosystem of products just like Apple did. It's worked for them for so long, and 10, 20 years from now, you're going to say, oh, I can't not have a Tesla anymore. I can't not have an what the hell is it called? Optimus robot. You know, I can't not have my solar with Tesla. I can't not have my battery pack with Tesla, my generator. You know what I mean? So it's going to be an ecosystem, in my opinion. So that leaves Mobileye to be the Android of the phone market, or sorry, the Android of the um, full self-driving autonomous vehicle market. Okay, that was reason number two. So reason number three, technical analysis. I've been covering this name since it was down at $11, down $11, and I've been covering it for the past 6 months when we're back up here. So, it's a high five setup, or it's a high five trade. I've been in this name. It's an investment and a trade for me. Um, and basically, um, I don't want to get into the nitty gritty because I've already covered this name 1.5 million times on the technical analysis, but it bottomed out. It's in an uptrend. It's on the bottom of its bullish channel, and it also shows with our measured moves on the weekly, our volume shelf, our overall strategy, the high five indicator right here that's green, it's showing that we are going to fill this gap right here up to $26.95. And then we're going to continue higher and higher and higher until we get to all time highs if the business keeps trucking like it's trucking on the fundamental side. And then on the daily chart, that was the weekly chart, on the daily chart, with this massive cup and handle with a measured move up to $28. So it sympathizes with the move up to fill this gap on the weekly. Our Williams consolidation box is formed and continuing sideways, which means we continue higher. And we have this measured move with this cup and handle pattern that we're about to break out of up to $28. So the technical analysis, and we're bottoming out here and continuing higher. The technical analysis on this as well, if you know or don't know my high five trading strategy, it's all there. And it's my number one trade and investment right now for a very large reason. For these 5 reasons. That was number 3, the technical analysis. Number 4 is actually going to be the short squeeze possibility. This name right now has a 22.43% short float, according to Fintel, with a 5.38 days to cover. If you don't understand what short squeezes are, if you don't understand what I'm talking about right now with the charts, let me just break it down in the simplest form. Basically, think of a hedge fund. It's like this. It's like the GameStop saga, if you know that. A hedge fund says Mobileye is going to go bankrupt. They are going to $0, and I'm going to short the living heck out of this name. So much so that I'm taking basically a quarter, 1/4 of these shares and shorting them on the open market. And the other 75% of the shares are held by investors, um, you know, insiders, people that believe in the company for the long term, or traders in and out, right? So they're holding a quarter of those shares to the downside, and we've continued higher. And I think we're going to even continue more higher, like I talked about. Continue more higher. We're going to continue higher, like I've been talking about, for all these reasons. And when that happens, they are holding these shares basically, again, in the simplest form. They're wanting the stock to go this way, but the stock is going this way. And the more the stock goes up, the more they get squeezed. And when they get squeezed, basically it means that they are getting closer and closer to this 5.38 days to cover. And basically, just like you pay interest rate on your car or your credit cards, the longer you don't pay, the more you are getting squeezed by the banks to pay up. And eventually, what happens? If you don't pay, you don't pay, you don't pay, and then you get repoed. In this situation, when you don't pay, you don't pay, you don't pay, you don't cover these shares, the hedge funds don't cover their shares, they get repoed as well. But they don't get they don't get their car repoed, they don't get their house repoed, they don't get other things repoed to pay out their credit card debt. They get their shares repoed. They get their shares they are forced to buy those shorted shares back, because shorting a share basically means you are borrowing the share and giving it back. Once it gets, you're borrowing the share at this price and you will give it back at this price, and you get this difference. This is your profit, the difference, right? So when they borrow this share because they think it's going to go this way, but it goes up and it continues to go up, eventually they're going to get repoed of those shares, meaning that they borrowed it. Now they have to purchase it, they have to buy it. And when they buy it, it causes the stock to go up. because when they cover their shorts, the stock goes higher because they're essentially buying these shares now instead of shorting them. Because in order to cover their shorts, they have to buy them back, right? So, when just like you get your car repoed, you have this massive spike in emotions because you just got your car repoed. It basically you couldn't pay it, couldn't pay it, couldn't pay it, and then you get it repoed because you couldn't pay it. Same thing with the stock price. In the cover in the shorts, they have their shorts. They can't pay. They can't pay. They can't pay. They don't want to pay to buy them back, and eventually the banker comes in and says, "We're repoing them. You better pay up right now for the shares." And it happens all at once. It's called a short squeeze. And that's when we have this parabolic move in the stock where all this volume comes in because they're buying back the shares like crazy that they shorted. Like I said, almost a quarter of the shares that are out there right now to be traded. So, as you can see, if you understood my analogy, I hope that was clear enough to get you to understand that when this happens, it is a massive, massive move to the upside, and they have to cover one fourth basically of their shares or close to it to basically because they're getting repoed. Um, that's number 4, and the last reason that this stock and company is a buy, and you really should be buying it, not financial advice, but in my opinion, if I was in your shoes, I'd be buying it because I have been buying it, and I have options, leaps. I have a lot of shares in this name for all these reasons. The last reason is going to be the fundamentals, and for an investment, fundamentals are very important. Like I already told you, I believe that we bottomed out on our revenue, on our margins, and I think we are going to continue higher because we had all those headwinds: China, interest rates, inflation, poor auto industry. We had all those headwinds that are now turning into tailwinds because all of those things are starting to get better. And when they start to get better, they flip from hitting you in the face like on a roller coaster with all that wind or rain. And now the wind and rain is at your back, pushing you further and further higher. Okay. So this is my personal um, high five investing strategy. This is this is an Excel spreadsheet that I personally made to help me in determining when I want to invest in a company, not invest in a company, when I want to exit the company with my margin of risk, when I want to start buying in, how low I want to buy in, at what prices, at what discount am I getting to my fair value, X, Y, and Z. I'm not going to go super deep into this, but all you have to know is with the conservative numbers that I have put in here for revenue growth, for for their free cash flow margin rate. This is mainly a discounted free cash flow with free cash flow yield, PE, and PEG ratio. But PEG ratio is super bullish. Forward PE is 24, very bullish. Like I said, it's 47 right now currently because they had this $1.7 billion down year from prior year where they were at 2.2 or 2.1. I have them having a free cash flow margin of 12% for the next 5 years and then 22% for the next um, or for the last 5 years of this 10-year analysis. And essentially they were doing 22% before the headwinds kicked in. So to get back to 22% within a decade with everything that I told you already that's coming down the pipe and the new partnerships, not just Honda, but a lot of other partnerships. And if they do land Honda, a lot of other automakers are going to be lining up, especially if they do a good job, right? So just X, Y, and Z, these 5 reasons. In my mind, it's a no-brainer, but you might not think that, and you might think I'm crazy and this is a stupid investment, and that's totally fine. But I'll put my name on it, and I'm sitting here telling you that if you think it's a dumb investment, see me in 6 months, see me in a year, see me in 5 years, see me in 10 years. I have a feeling, a very, very strong feeling, and this is on the internet, so it's public data, right? I have a very strong feeling that I'm not going to get any of those comments that say this aged like milk or a bunch of clown face emojis. I truly believe that I will not be getting any of those comments, and I'll be getting comments more so of, wow, he called it. He nailed it. He really was spot on with this investment and the future and where we were going and where this company was going. So not going to get into all this data. I'm going to wrap this video up. But basically, right now, I believe this company is a $41 intrinsic value or fair value, which is a 55% current margin of safety on this name. And your 5-year CAGR is going to be around almost 46%, and your 10-year CAGR is almost 33%. And yeah, don't pay attention to these two numbers honestly, because they're a bit crazy. But not the 5-year. I think within the next 5 to 10 years, we could get that 10x from $18 up to about over $100 per share and basically over $100 billion market cap. I truly believe that, and they're currently a $14.8 billion market cap. That is what I truly believe with this company on the fundamentals and investment side. The short squeeze is going to have a huge, nice pop, and it's going to get us, um, you know, into the. Here's the thing: if we continue higher and we get this deal done, that's going to send us to mid 25s if they get the Honda deal done on January 7th, if it's announced, like I predict it is. If we have that, then basically $25 is where we will be, in my opinion, or around $25. And then I believe we get that short squeeze within a very, very short amount of time. And with that short squeeze, I think it could be a $5 to $10 short squeeze. So it would take us around 25 into $30 plus, just based off the short squeeze, after we already have a massive move up and a run, because this company just partnered with Honda. Honda is a top brand, and for reliability and just legacy car brand maker. So yeah, um, those are the 5 reasons that I truly believe Mobileye is a massive, massive, massive buying opportunity anywhere under $20. Anywhere under $20. Because again, wrapping up, you have a major catalyst that I believe, I'm 99.9% sure, in my opinion, I have to say that, in my opinion, that they are going to land and announce this partnership. Honda's going to announce it at 10:30, and then they're going to come in and say at 11 a.m. They're going to say, "Yep, that's the big announcement." And then the technical analysis, the fundamentals, like I talked about, the short squeeze opportunity, literally a quarter of the shares outstanding, almost a quarter of them, 1/4, are basically ready to be called and repoed and cause this stock to fly higher and get short squeezed. And then finally, like the horizon for this company being already a top 3 name in a multi-trillion-dollar um sector here coming in the future. Give me every share in sight. Give me every single share in sight. And yes, I'm putting my money where my mouth is, and I have a lot of January 17th call options. That's what I'm doing. You play your own book, you invest in your own way. I just want to put this video out there to put all my thoughts in one. I've been posting about this. It's technical analysis, on fundamental analysis, on investing analysis, left, right, and center. I've been just talking about this name left, right, and center for months and months and months now. I just wanted to make one seamless video where I have my top 5 reasons all laid out right in front of you, right in front of your face, and you do what you're gonna do. I know my book. I know how I'm playing it. We'll see if I'm right or I'm wrong. And you can either hop on for the ride, or you can sit on the side, or you can be toxic and call me crazy and blah blah blah. And then the people that have been doing that, when we if I'm right, um, you know, I'll make sure to kill you with kindness. So yeah, guys, I hope you enjoyed the video. And let me know your thoughts in the comments. If you're in this name, out of this name, if you think I'm crazy, whatever. But I am very, very confident in this name. I haven't been as confident in an investment since Tesla, when I was investing in them back in 2018. So yeah, that's my views. That's the top 5 reasons that I think this is a great, great opportunity, either for a trade or an investment, um, for the next for 2025 and beyond. So again, drop a comment what you guys are doing, and I'll catch you in the next one.